Hello there, my friends, and welcome back to another episode of TA with MK. My name is MK. Today's episode, we're just going to quickly discuss a couple things that I find interesting on a couple of the Bitcoin charts, as well as the Total 2 chart. And we're going to be using the logarithmic setting, or the log setting, for our charts today to show you the interesting things that I found. And yes, I did have to look up on Google exactly how to pronounce that.
Logarithmic.
But anyway, if you guys find that interesting, please remember to like and subscribe, and let's discuss. It's TA with MK. It's TA with MK. Now, I'm not going to go too in-depth in today's video on the difference between logarithmic, right, and linear or arithmetic scaling. Just know that the majority of traders use linear. As it will, and I'll explain why actually. So here is the main differences between the two, is that on linear, or arithmetic as they say, if we turn log off down here on the bottom right on Tradingview, you're going to see over here on the right where it's doing the scaling of the prices, that there's an exact distance between each of these, like 80,000 to 90,000. That's a $10,000 difference, right? But the space between the two is exactly the same as it is between 90 to 100, 100 and 110, right? It's just giving you the exact equal spacing between the two. Whereas if you do logarithmic or logarithmic, right, it's doing it based off a percentage. What I mean is, you can see down here on the lower side that 2,300 to 2,800, which is only a $500 difference in price, is the same distance between the two if you were to draw horizontal lines as when you come clear up here between 95,000 and 115,000, which is obviously, a $20,000 difference in price. And it's just a percentage. What I mean by that is, you come clear down here, the percentage difference between 2,800 and the one above it, which is 3,400, in this case would be about 19 to 20% ish, right? As you come up here to 95,000 to 115, it's the same, right? It's a percentage that this is using. So as you go up through each of these numbers, 5,900 to 7,100 to 8,600 to 10,600, right? It's just the percentages remain the same, and that is the biggest difference between the charts. And the reason why log can be useful to use on a weekly or a monthly or a very zoomed out time frame on an asset that has a lot of history is it just gives you the ability to see all of the price action easier in your screen, right? Hopefully that explanation at least made somewhat a little bit of sense, because now the reason I gave you that explanation is to explain why this thing that I found interesting in the charts, you just have to take it at face value, but don't necessarily take it as gospel. And the reason is I'm going to show you the difference between the two charts as it relates to this concept or idea that I found, right? So right now we're on log. And if you go back here for the price action between late December of 2020, clear until we broke down in early May of 2022, you had this big head and shoulders pattern, right? Where you had a left shoulder, the head's obviously slightly higher. You had a bearish right shoulder, which was quite lower. This would be the neckline, and it broke down. The way you find the measured move, obviously, is just from the neckline to the top of the head, and then wherever it broke down from, you drag that over, which is what I've done here, and that gives you the measured move of that pattern. Which in theory would be where the price, after it breaks down, could potentially go to, right? Where buyers may be waiting based on that technical analysis, right? Well, if you rewind back and listen to my butchered definition or attempt to explain what the difference between logarithmic and linear scaling is, then what you would understand then that it's just a percentage. So in this case, that measured move, obviously, if we just take the percentage of it, it's about 50%. Well, then obviously when you move them down here, that's just going to mean that it's going to be another exact 50%. If we go from the measured move where it broke down to where the target is, it's right around 50%. And the reason that I tell you that is that when we switch over now to linear, so we turn it off, you're going to see that the measured move for that pattern is not even close to what it was when log was on. So for example, now obviously this head just got a lot taller, and we can take this, we'll do this more conservative one here on the left. That's one reason I have two here, is I did a conservative one that was more the candle body closes here, and then I did the more aggressive one that was the top of that wick from just under 70K or just under 69.5, which was our all-time high, right? But we'll just clone this, right-click and clone this more conservative one, and then drag that down to the breakdown. You can see that most traders, if they're using linear or arithmetic scaling, You take that over to the breakdown, and clearly we're nowhere near the measured move, right? That measured move's clear back down here at like 6,500. So anyway, the reason I showed you that is just because it doesn't really mean that one way or the other is, the right way to do it. At the end of the day, measured moves, are what they are. Doesn't mean just because something breaks down that that's exactly where it's going to end up. Not necessarily. Really, patterns are just something you trade so that, if they do break down and there is volume involved to confirm it, that you just know, hey, in this case, it was a bearish pattern that broke down. Clearly, price is going to favor the downside. Reverse of that, of course, if this was an inverse head and shoulders and it broke to the upside with volume, doesn't necessarily mean that we 100% are headed to the measured move target. But we could. But it does mean that in that case, the asset would be bullish, right? That's really all pattern trading really is just finding a way to see which way the trend's going to head next. Now, this next chart that I found interesting would just be kind of a piggyback, I guess, off of the last Bitcoin chart, because it's the exact same idea using the logarithmic scaling. This is the total 2 chart, which I've discussed previously on the channel, but if you don't know what total 2 is just the entire crypto market cap excluding Bitcoin. So all of the money in crypto that's in every other coin like Ethereum and all the rest of the altcoins, but not the money that's in Bitcoin, right? So right here on the right, it displays it in a price, which right now we have 483, so roughly $483.5 billion in altcoins, right? Every coin outside of Bitcoin. And on this chart, we have something very similar. Now, this is not nearly as clean of a pattern because it's just a lot steeper, but you basically had still a very similar head and shoulder pattern that developed on the total 2 price action. You had this left shoulder, this head, once again, a bearish right shoulder, and then it broke down, right? Well, just like the other one, when you have log on, interestingly enough, it perfectly hit its measured move. And one thing that is a little different also about the total 2 chart is Bitcoin lost the 200 simple, which is this yellow 200 moving average on the weekly, whereas the total 2 chart actually currently is using it as support. It wicked down perfectly to it, which also happens to just be the all-time high from the previous cycle. So where, the all-time market cap from the previous cycle, the blow-off top happened around 430 billion, and that currently is where we are finding support. So just something else that I also found to be interesting. And then the last chart I wanted to discuss was just the Bitcoin weekly chart again. This time I'm on the Binance chart on Tradingview, and I just wanted to kind of discuss the price action behavior of the last cycle top and whenever it finally capitulated in the bear market one final time to what price has kind of done this cycle. Now, we're not going to focus so much on the blow off top itself and what it did for the following, so many weeks after that or months, because this area all around here clearly was different this cycle in that we had, 2 different tops essentially. Like this amount of time that cross between here and here isn't all that much different. It's about 2 or 3 week difference between like when this could have potentially blown off around here, right? Well, the first time, and what happened here back in 2017/early 2018. And so we're not going to focus so much on that because obviously the price action, it was just different this cycle. We had 2 tops or a double top, whereas we just had a blow off top the previous cycle. And I have some other theories that I always felt Bitcoin should have actually went higher than it did this cycle. I think the timing of Coinbase Pro going public, and just some other things that were going on at the time, buy the rumor, sell the news. Bitcoin lost its momentum. Clearly it was able to regain it and make one final push higher. I always personally felt Bitcoin should have been able to get up closer to the 100K that everybody had been predicting. I didn't think he'd have the momentum to reach it. I figured 80, 85, maybe 90 if things got really heated. And then potentially it would have had something similar to a blow-off top that maybe would have led to price action looking a little more like it did to end the last cycle. But that's neither here or nor there at this point because it didn't do it. So we just have to go off what did happen. But anyway, that being said, at a certain point in the I guess capitulation or the sell-off, the retrace, whatever you want to call it, price action started to do very similar things that it's doing now back in April, May of 2018 to what it's doing, what it started to do in about November of 2021 of this past year, right? You kind of started to have this little triangle form / potentially a little falling wedge, right? Very similar to what it did over here recently, where it kind of had this little triangle and then it finally broke to the downside of it. If you just take the percentage drop from when that finally that final big capitulation happened in the bear market of 2018, you had about a 50% drop, which what I found kind of fascinating is that to this point, we've had a very similar capitulation, right? I'm not saying this is the final capitulation or making any predictions, but I just found it interesting that once it broke out of that same similar formation, it dropped around 50%. And then what it did after that, it also lost this lower trend line, and that eventually became the resistance that kind of created this little symmetrical triangle below this line of resistance, right? And recently we've done the same thing. We broke out of that triangle to the downside. It acted as support for a second. That's not what it did back here, but it did this cycle. It did act as support briefly, but now it's broken below that, and that's become its resistance. And just something worth tracking, or that I found interesting, is a lot of people are going to assume if this were to do something similar to this price action back here, where maybe it starts to create a bit of a symmetrical triangle. Maybe we do pump back up to 23K, then we put in a higher low back down here at like 19 again. Then we pump back up and we start getting condensed. The actual pattern that you're looking at there, which is a symmetrical triangle, is actually a bearish pattern in this case, because statistically speaking, it's a continuation pattern, which just means whatever way it came into the pattern, it has a higher percentage chance of breaking that direction. So in both cases, just like back here, let me clean the chart up real quick before we finish this final thought. But just back here, obviously it broke into this little symmetrical triangle coming from the down to the downside. So you would have expected this to compress inside this triangle and eventually break lower. There would have been a measured move, back down here, probably somewhere around, 2,500, let's just say, something like that. I'm just rough eyeballing it. So, you're going to have people say, if this happens, let's say price action between now and just like the end of the summer, just kind of goes sideways more or less. Maybe we do put in some lower highs and some higher lows, and we just start to compress similar to what we did back here. Most people are going to be then saying, hey, the measured move for that, right, would be, in fact, let's just try to figure out what that would be. Again, not predicting anything, and this is not necessarily what's going to happen, but you would take that where it breaks down at the end. You'd have the measured move back down here to around 14K, which would have a lot of confluence with a lot of people's price targets, right, that they've been making for the last few months ever since Bitcoin's been breaking down. But what I wonder is, what if it could do something similar to what it did in the previous cycle, where it went against the odds, actually broke to the upside, started trending up. I don't know if we would necessarily get that mid bear market crazy pump like we got back here. We could wind up just going sideways for a year and a half, something like that. Doesn't mean that part has to follow, but if you're somebody that has a little bit of hopium and you're wondering, hey, could this potentially be the bottom, these are just a few things that I was looking at in the charts today that I found interesting, that I thought that I would share with you guys. Now, just a heads up, obviously I'm not drawing any major conclusions from anything that was discussed in today's video. To me, it's ultimately timing that matters the most, and I don't really see any purpose in getting too excited about the Bitcoin price until probably the end of the summer, or even the end of this year. As just from a timing perspective, as it relates to the halvings and previous cycles, I think that's more the time period we want to target, as far as potentially being the area that we start to accumulate some of our coins long term. But I just wanted to kind of show you a couple interesting things that I had found in the charts, and it kind of does point that maybe the bottom is closer or nearer, sooner rather than later, I guess is what I'm trying to say. So just something to keep an eye on. If you guys found that interesting at all, please remember to like and subscribe. We'll talk to you tomorrow. It's